Hi everyone, welcome back to my channel. My name is Phi and this is Money Philosophy. Thank you very much for coming back for another episode of stock analysis. And today we have a special topics because a lot of you have received or will be receiving your stimulus check, and the question is, what now? Well, the answer depends on how long do you have before you need to deploy that cash. If you need the money within the next 6 months, chances are you can't afford to lose any penny by risking it in the stock market, so keep the cash. But if you have a window between 6 and 12 months, ideally beyond 12 months and even beyond 24 months before you need the cash, then you could probably consider investing as a way to keep and grow your money in the next few years. With all that said, this channel is about entertainment and education. I do not offer investment, financial, or tax advice. What I say here may not be applicable to your personal situation and risk appetite. So do not take my words as gospel or as investment advice. Please do your own research and due diligence before investing. If you are new to my channel, please consider subscribing. I post at least 2 videos a week on personal finance, investing, and stock analysis. So I look forward to seeing you in future videos. In this video, I'm going to lay out a few different options for investing your stimulus check or any sum of money that you want to put in the stock market. I'm starting with the most aggressive and highest risk type portfolio, and then I gradually move to a moderate and more conservative portfolio. This could be applicable to any sum of money that you want to set aside for your investment, not just your stimulus check. The premise for my stock pick is that we just had a market correction, particularly in the technology sector. A lot of these stocks are sitting around 200 days simple moving average, which are really strong support, and I expect some of these stocks will bounce from here. As such, investing now has a much higher probability to make more profit than if you were to invest at all-time high a few weeks ago. So first thing first, we are going to go through the most aggressive portfolio. The most aggressive type carries the highest risk and highest volatility, but also the highest possibility of return. The first stock that I will always recommend to you guys would be Tesla. It's my favorite company, my biggest holding, and I think the stock has a lot of potential both in the short term and in the long term. The second would be Shopify. Then we have Zoom, Fastly, and FUBO for this type of portfolio. The second type of portfolio is what I call moderate to medium risk. I have Palantir here, Square, and AMD. With these type of stock, we have less volatility, but at the same time, a lot more possibility of return given the risk. They are also growth type of companies. The most conservative portfolio that I will point out here would include Apple, AMD, NVIDIA, and Facebook. Now, most conservative here still means pretty aggressive for a typical value investor, because if you're looking at a shorter term horizon for investing, I would not recommend going with the super ultra value, ultra conservative stock, because that doesn't really give you any growth. And so with that in mind, let's jump into the individual stocks here and why I think they are going to perform really well in the next few months, starting with first technical analysis. My first recommendation is Tesla. In general, Tesla is a good investment for the long term, given that it has high volatility and the fact that it has retraced over 30% from all-time high. It is also a good opportunity for short-term trading or swing trading. However, if you do need the money within the next 12 months, I still think Tesla is a good place to put your money in. 2021 is going to be an amazing year for Tesla, with 2 new factories coming online, the Cybertruck and potentially the Semi going to be rolled out. So it is definitely a good company to invest in. Looking at chart here on the daily, it has retraced, like I said, over 30% from all-time high of $900. On the hourly, it has pulled a bull flag with a temporary target of 733 and 766. $766 also happens to be its 50-day simple moving average, so naturally it should pull back there. So right now with this hourly flag, it is staying at the upper end of the flag with the potential to break out very soon here. So I do expect Tesla to break out shortly. Usually it needs some sort of catalyst for breakout with an hourly bull flag, an analyst upgrade, or a change in rating or some good news could potentially be a catalyst. Don't forget that Kathy Wood at ARK Invest is about to release a new price target for Tesla that could be a giant catalyst that can push the stock higher. With all that said, keep in mind that Tesla has the tendency to buy the rumor and sell the news. Usually with good news coming out, it will run for the days leading up to the good news and then tank on the day of or the day after. So be very careful with that if you are a trader. As far as long-term investing, there's nothing to worry about. This is a really good company, and it is a good entry point at this point. Let's take a look at Shopify. Here is the weekly chart for Shopify. Overall, it is a bullish pattern. It usually has a breakout, consolidation, breakout, and continues to consolidate and breakout. So right now, it is in the consolidation phase. It has pulled back a little bit, but it has not made a lower low by any means, so we're still in a bullish pattern on a longer term. Let's switch over to Shopify's daily chart. Right now, Shopify is trading above 200 days simple moving average and below 50 days simple moving average. So it bounced off of 200 days simple moving average last week, and it continues to make its way up. Ideally, it's going to go to 1231 first, which is the 50 days at SMA, and then start going above that. There are quite a few resistance that it needs to go through, but right now it has a gap to fill, and to fill that gap, it needs to get to 1375, which I think in the short term, it will first get to 1231 and then 1375. If you want to understand Shopify's fundamental, I made a video before its last earning. I will link it down below so you guys can take a look and understand Shopify from a fundamental standpoint. Move on to Zoom. Zoom on a weekly chart and a bigger pattern, it does look like it had a recent breakout, and right now it is retracing back. One could say that this is a descending triangle pattern, which could prompt it to break down further. For me, I see that the last weekly candle is a reversing candle, so I do have belief that it's going to go back up. Zoom has been very strong in the recent earning and with a lot of revenue growth in the next few years. So the fact that it could go back up is possible. However, as with all other growth and aggressive high risk stock, this stock is very volatile. It could start the day being green and then end the day deep red and vice versa. Let's switch over to Zoom's daily chart. Right now, it is trading below 200 days simple moving average, which is $362. Also below 50 days simple moving average of $376. The 50 days is about to cross to the 200 days, so this is a potential bearish sign here. I would say that in order for me to enter Zoom, I want to see Zoom above 362 and stay there. Conversely, if Zoom continue to fall down, the next support will be 319 and then 298. At 298 is probably fairly safe to enter and wait for a bounce. Right now, from a technical standpoint, it does look bearish, but it is this kind of stock with the highest risk and the highest potential based on this chart pattern. Once you wait for the stock to make it back above 200 days and especially above 50 days, the stock is going to move very quickly on the upside, and we don't know when it's going to start making the first wave there. You're going to have to leverage the fact that the market is going to be bullish in the next few weeks due to stimulus payment, a new injection of money into the market. This stock could run, but I would be very cautious if you do not have a lot of money to put in the market and you don't have huge risk appetite. This should be the last on your list. Here's the daily chart for FUBO. FUBO right now has been retracing back below 50 days simple moving average, which is about $38. Note that FUBO has a gap from 37.66 to 41.85. So if it does fill that gap, it will go back up to 41.85. That is roughly 26% from where it stands today, which is $32.31. FUBO has a daily gap The last time it dropped from 41.85 to 37.66. So if this gap is going to be filled, FUBO needs to go back up from 32.31 where it stands today, all the way up to 41.85. That is almost a 30% run. All-time high is at $62, so that is almost 50% from here. So FUBO does have a little bit of a potential there. There are also resistance levels before it could get there, but right now it does look good. It stays well above 200-day simple moving average. It never got anywhere near that, and it is about to bounce back up to 50 days. If FUBOs can stay above $38 for a couple of days, I would say that the chance that it will go back up is very high. Another thing to note is that if it does go back up, that would make a double bottom, a W pattern here, which could be very bullish, and FUBO could arguably take out its last all-time high to make a new all-time high. The only thing of concern is the volume. The volume doesn't look very promising right now compared to when it broke out the last time. The volume was really good. So that's the only thing I would pay attention to. If you do have a longer time horizon, like I said, 6 to 12 months and beyond 12 months, I definitely give the stock a shot. Here is Fastly. Fastly has been very interesting lately. It has been moving wildly with a lot of different gaps. It would gap down, move down further, and then trying to make its way back up. Right now, the 50-day simple moving average and the 200-day simple moving average are very close to each other. It could potentially cross and create a death cross. In that case, it won't be extremely bullish. But in the grand scheme of things, it is still in the consolidating mode. If we switch over to the weekly chart, we do see that it had a big breakout and then it's consolidating. One could even say that this is a bull flag in the making with a lot of volatility at the body of the flag. I do believe that Fastly will continue to go back up once it's get over the hump right now. All-time high was $136, which is almost 80% more than where we're at today. So keep that in mind. With Apple weekly chart, we see that the overall weekly pattern is that Apple is still pretty bullish. It is generally having a breakout, retracement, breakout higher, retracement, and it's been making higher low and higher high. So right now we have a higher low leg, and if it stops right here, it doesn't go below 102.96, then we expect that Apple will continue this trend and reach for a new all-time high. The current all-time high is $145, so we're looking for somewhere above that, north of 150, 160 range, if this trend does continue. The RSI on the weekly chart does signal that Apple is going to go up. The daily chart for Apple is looking very good. It does look like a huge consolidation in the work. If you look at the volume on Friday, March the 12th, the vast majority of the volume was a buy volume. RSI is going up while the stock price is moving sideways, so this is a clear divergence side to the bullish. It is trading between 200-day simple moving average and 50-day simple moving average, so it is a healthy pullback. If it goes above 129.81, which is the current 50 days SMA, I do expect Apple to reach back up to previous all-time high of 145 and potentially go higher than that. So at the current stock price of 121, if it goes back up to 145, that would be roughly 18% more than the current price, which is not a bad investment for the low volatility that it has to offer. Let's talk about Facebook. Facebook is one of my favorite. It is a very stable company with a lot of cash on hand. The fundamentals look really good on Facebook. I am not too excited about Facebook usually, but it is a good way to store my cash, similar to Apple. And I don't usually do CDs or anything like that. So Facebook, Google, and Apple are just as safe for me. Of course, that still is very aggressive compared to an average person that put their money in a CD. So take my words with a grain of salt there. But I really like Facebook as an investment, as a long-term investment, but as a short-term investment, it also has a lot of potential. So right now, once again, Facebook is on a bullish trend, consolidating since around August of last year. Facebook is due for a big breakout at some point in the near future. We don't know when, but based on this chart pattern on a weekly basis, I do expect Facebook to break out. You are looking at the daily chart for Facebook. It is a similar story to Apple. The volume for the last few days has been above 100%, and it has mostly buy volume, which is really good. The daily chart looks to be indecision at this point. The 50-day simple moving average and 200-day simple moving average seems to be very close to each other. If the white line here cross over to the red line, that is not a good sign. But temporarily right now, Facebook is still in a consolidation pattern in the grand scheme of things. Similar to Apple, it has a RSI bullish divergence, so I do expect Facebook to go back up to its all-time high of $304, and that is roughly 15% from where we are here, which is also very good. Good old NVIDIA. I have a full video on NVIDIA a few weeks ago. I'll put the link down below for you as well. I reviewed the fundamental there. Here, looking at the chart, my weekly bull flag is still intact. I don't see any reason to sell out of NVIDIA at this point. If anything, this is a good opportunity to buy. The weekly charts still look pretty solid. Switching over to the daily chart, the bullish pattern is still intact. It has been consolidating since September up until this moment. Oh boy. And it bounced off of 200 days SMA, move all the way up. It is heading for 545, which is 50 days SMA, and then the upper end of the bull flag at 584. All-time high is $614.90. Once it gets close to all-time high and it has decent volume, it is going to fly to 757 and 982. Once again, these are weekly bull flags, so do not expect them to materialize within the next couple of days. We're talking about weeks and months here. Take a look at AMD. This is weekly chart for AMD. AMD is a semiconductor company that is also very solid in its own space. It is a very good competitor with Intel, and so far it has been doing really well. The last few weeks, ever since August of last year, it has been in consolidation mode. The highest was all-time high was $99.23. Right now it is trading around $81, so that is roughly 20% below all-time high. It should easily get there and surpass all-time high. So I do think that based on this chart, AMD has not corrected too much, and it could potentially go back up to $88, which is 50 days simple moving average, and then fly above $99. Note that right now it is trading right around the 200 days simple moving average, which is around $78, $79. It has a gap that it has not filled. To fill this gap, it needs to go all the way to $68. So that is something to watch out for. If the market continues to get weak, it could go as low as $68 from here, which is a significant decline. But given that the market does look to be consolidating or a little bit more upbeat than the last couple of weeks, I do expect AMD to go back up. It is a good entry point here, but if it does go below 75 and it gets to 68, definitely a great entry at that point. Taking a look at the daily chart for AMD, I see RSI divergence, I see buy volume for the last few days. Very much similar story to Apple and Facebook. And I like AMD where it's at right now, bouncing right off of 200 days SMA and consolidating around here. So I definitely buy AMD starting this point. On that note, I am going to end today's video. Thank you very much for paying attention and staying this far. If you are interested in technical analysis, please comment down below and I will make more similar information for you. Technical analysis is very fun, but combine technical analysis with fundamental analysis to pick a good company to invest in and a good time, a good entry point to enter. That would be very powerful. So I hope you find the information helpful, and until next video, bye.